How do you invest in international companies here in Canada? Hey guys, it's Adrian here, the Canadian in a t-shirt. And today, I'll break down how to gain international exposure with an investing product called CDRs, or Canadian Depository Receipts. It's no surprise that I love investing in the Canadian and US markets. That's the majority of my portfolio. But it's equally important to have international exposure as well. Why? Well, Canada only makes up 3% of the worldwide market. So if you only invest in Canadian companies, you're missing out on 97% of the world economy. Just think about your own life. How many of your favorite brands come from Germany, Switzerland, or Japan? We're talking Mercedes-Benz, BMW, Nestle, Toyota, Honda, Sony, and Nintendo. Wouldn't it be great to invest in these companies? I'd love to, but it's not easy here in Canada. Until now, and that's thanks to BMO Global Asset Management, who is sponsoring this video. BMO is introducing a line of international CDRs here in Canada. This is something I'm very excited to start and share with you guys, so thank you to BMO for making it happen. Investing in international markets is very important, but it's hard to do. You can buy shares on international stock exchanges, but the commission fees can be very expensive. Plus, you have to find a broker that even supports non-Canadian and non-US exchanges. And you'll be buying in foreign currency, which comes with extra challenges. You'll have to pay currency conversion fees and deal with currency fluctuations between the Canadian dollar and the euro or Japanese yen. It's one extra layer of uncertainty in your portfolio that can have a negative impact. Personally, I've avoided buying stocks directly off the Tokyo Stock Exchange or the Frankfurt Stock Exchange for these exact reasons. It wasn't worth the fees and the hassle, especially for a small investment. For international exposure in my own portfolio, I've invested in ETFs in US dollars or Canadian dollars that contain foreign stocks, and it's worked well. I avoid those hefty commission fees from buying foreign stocks directly, and I get a diversified portfolio of worldwide companies and emerging markets, all managed for me within the ETF. Watch this video to see my favorite options. But it's not perfect. I don't get to control the individual holdings within the ETF that I purchase. I put my money in, and I know that this ETF will invest, let's say, 20% into German companies, but I can't choose which German companies to prioritize. I can't double down on a particular stock like Mercedes-Benz. So ETFs are great to get that broad international exposure, but you lose the ability to target individual stocks and concentrate on the ones you like. That's where CDRs come in, Canadian Depository Receipts. And thanks to BMO, we have a number of new options for Canadians. A CDR allows you to invest in global stocks in Canadian dollars. That's right, you're not buying an ETF or a bundle of companies, you're choosing individual stocks from Europe and Japan without any currency conversion. So you can gain exposure to shares of Mercedes-Benz in Canadian dollars. This is a game changer. Let's dive in. With a CDR, your investment is currency hedged. That means you minimize currency risk. This protects you from volatile exchange rate fluctuations. Just look at the Japanese yen versus the Canadian dollar. Over the last 5 years, the Japanese yen has fallen by 25% versus the Canadian dollar. So 5 years ago, if you invested in Nintendo directly from the Tokyo Stock Exchange, even though Nintendo has done well, your investment was negatively impacted by the falling yen relative to the Canadian dollar. That would have been avoided with a CDR because it minimizes foreign exchange risk. With a CDR, it significantly reduces the barriers to entry. You can buy foreign stocks in Canadian dollars. No currency conversion, no time zone difference with their market hours, since CDRs are traded during Canadian market hours, and so you never have to deal with foreign stock exchanges. Now, anyone can gain exposure to these global companies, even if you don't have a lot of money. Let's look at Adidas. If you want to buy one single share of Adidas, it will cost 200 euros as of April 2025. That's about $315 Canadian. So you need to save up at least $315 to make the smallest investment in Adidas. Even more when you add in commission fees. But with a CDR, you have a much lower share price. They trade around $10 a share. With a CDR, you're effectively buying fractions of a share of these big companies. That gives us greater flexibility and it makes it much easier for us to get started. Let's break down what exactly does it mean to own a CDR. Well, it gives you many of the same benefits as owning a stock. However, with a CDR, you own a depository receipt that provides exposure to the underlying company. You also may receive dividends, but this is important. Your dividends will be paid in Canadian dollars. That's great for us. Here's the main difference. If I own 100 shares of BMO stock, I know exactly how much my dividend will be. Each share of BMO pays a dividend of $1.59 as of April 2025. So with 100 shares, I'll receive $159 in dividends every quarter. With a CDR, the amount depends on the dividend per share, but it also depends on the exchange rate on that day. That's because my dividends are being converted into Canadian dollars. With CDRs, I get direct control over my international portfolio, so I'm going to be using CDRs going forward. But there are some important things to consider. When you buy a CDR, it's just like buying a Canadian stock or ETF. Everything will be in Canadian dollars, and there's no extra fees. You just pay the commission fees from your broker. There's no upfront cost, but there is an annual fee, kind of like an ETF. That's how BMO makes money on CDRs. BMO charges a small fee for the foreign currency hedging transactions, and these fees are capped at 0.6% for the year. That's very reasonable, and far less than the conversion fees my bank would charge for buying in foreign currency. As an example, if I invested $1,000 into the Toyota CDR, that would cost me a maximum of $6 a year in fees. If I wanted to buy $1,000 of Toyota stock directly from the Tokyo Stock Exchange, I'd pay a lot more than that in upfront costs, foreign commission fees, and currency conversion. For me, I get much better value with a CDR and that small currency hedging fee. And similar to an ETF, this 0.6% fee is baked into the share price. You won't see this money taken out of your account. As an investor, holding a CDR feels like holding an ETF. CDRs issued by BMO will be offered in Canadian dollars, but they won't be traded on the TSX, the Toronto Stock Exchange. They'll be traded on the CBOE Canada Exchange instead. That shouldn't affect the average investor. Your brokerage will support the CBOE Canada Exchange, but it is smaller than the TSX, so you could expect lower trading volumes. Just something to keep in mind. BMO issued CDRs are brand new in Canada, and they are available now. Check out the link in my description. They're starting with around 30 CDRs from countries like Japan, Germany, Switzerland, and more. These CDRs are linked to big companies that you know and love, like Nintendo, Sony, Mercedes-Benz, BMW, Toyota, Honda, Mitsubishi, Volkswagen, to name a few. And this is just their initial launch. They'll be adding more foreign companies from additional countries as they go along, so stay tuned. Personally, I'm very excited to get my hands on these CDRs and add them to my portfolio. Of course, I will continue to invest in international ETFs to keep that broad exposure, but on top of that, I also want to double down on individual companies, and I'll be using CDRs for that. And again, you can use any brokerage you want. It will all be in Canadian dollars, so very simple. And you can hold CDRs in any type of account, including your TFSA, RSP, FHSA, or non-registered. The choice is yours. I'll include a link down below to check out the full list of CDRs issued by BMO, plus ticker details and all available markets. And once again, a huge thank you to BMO Global Asset Management for sponsoring this video and helping us Canadians to invest overseas with greater ease. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.